Hi everyone, so today I'm going to be covering a new company. This is a stock analysis video. The company's called Mobileye. So let's get right into it. Let's see how this company is doing, what they do, and all those things. So I'm going to go ahead and share my screen. And just to give a quick synopsis of it, they develop, provide hardware, software, and services for advanced driver assistance systems, ADAS, and autonomous driving AD to automotive manufacturers, including camera, computer chips, IQ, and sophisticated eyes. So think of Toyota, think of Waymo, those types of, well, Waymo is obviously autonomous, but Toyota, for example, they have ADAS. A lot of the newer cars have advanced driver assistance systems. That's like speed control and things like that. So just to put that in perspective of what they actually do, their systems improve vehicle safety and efficiency by detecting pedestrians and other vehicles, warning drivers of hazards, enabling increasingly sophisticated levels of automated driving, and with the ultimate goal of realizing fully autonomous vehicles. So again, great to see. If we check the earnings report, I would say the earnings report in general was okay. Mobileye will report their next Q for Q3, October 30th of this year. For Q2, it came out July 24th, and it was all right. Like I said, Mobileye reported adjusted EPS of 13 cents, which beats analyst estimate 11 cents. Total revenue was at 506 million, surpassing analyst expectation of around 485 million. So they did very well. This represents a 15% increase year over year. The key drivers were attributed to robust sales of the IQ chips, a ramp up of new ADAS programs, and solid demand for the supervision system. They also raised their guidance as well for the full year of 2025, revenue guidance to be specific, because here for EPS for next quarter, they actually reflect a year-over-year decrease. That's what they're forecasting. So it looks like there is some kind of turnaround. There is no long-term debt, which is good, and they have a lot of cash, which again, really good as well. Now, if we check the free cash flow, 2021, 456 million. Here, 589 million. Not great. It's not double or tripling. It's pretty slow growth, I would say, in general, and that's reflected in the earnings, growing only 15% year over year. With one of the lower market caps, they're more of a small cap, if even a mid cap, if it would be considered. Now, if we check simply Wall Street, which is important, simply Wall Street's going to say that it's not too great either. 589 million, next 3 years, 570 million. So the free cash flow is actually dipping down a smidge. It's not doubling or tripling, which generally I don't love to see. However, the financial health of the company is actually quite good. That Gemini was correct on that. A lot of cash, no debt, a lot of equity, no complaints here. Everything looks perfect with that. So they're financially solvent. Now, if we check my DCF is going to say it's overvalued by 21%. If we check Wall Street forecast is going to say it's overvalued by 11%. So either way, it's overvalued by a pretty significant margin right now. Well, maybe not significant, but 10 to 20% is, you don't want to overpay either for this high-risk company, for example. If we check Tipranks is going to have that it is 30% upside or 30% undervalued. Moderate buy, 9 buys, 8 holds, 1 sell, 18 ratings, low of 12, average 19, currently trading $14.59. So I would say in general, it's very okay. A lot of holds, 1 sell. I would say it's very okay. It's very modest, but it's something that I would want to cover for Q3. I probably wouldn't want to invest in this right now. I would probably wait and see if there's some kind of more growth involved here. All right, I appreciate it. Thank you, everyone.